their balance sheets. So again, monitoring some of those headlines coming out of that Goldman conference call. Switching gears, let's talk about retail sales for the month of June. Rose for the second month in a row. But if you exclude sales of autos, gasoline, and building materials, they fell 0.1%, the same as the previous month. What does that mean for the future of the retail industry, an industry, as you know, already plagued by tight credit conditions? And that situation could worsen if CIT, which provides financing for retailers and their suppliers, fails. Lots going on in the retail industry. Joining us right now to make some sense of it is Gilbert Harrison. He's the founder and chairman of Financo. That's an investment banking firm specializing in retail. Good morning.
Good morning.
Where do we start when we talk retail? What catches your attention? Is it what's going on with CIT in the morning or those retail sales numbers?
Well, I think it's a combination of both. It's the entire environment that still is somewhat in chaos. While things may have somewhat leveled off, they're not free-falling as they were several months ago. They still are not responding to any strength. And credit is tight, which causes, whether it's CIT or something else, credit is very difficult for the suppliers to these retail companies to get.
Which is why the CIT story is that much more important.
I mean, it's not the people they sell to, whether it's the Macy's or the Kohl's or whatever. It's the suppliers that need this credit to be able to order the goods, to be able to send to the retail environment, retail companies.
Gilbert, is that why retail remains weak overall, do you think?
I think retail remains weak because it's, what, 70% of consumer spending? The consumer, whether it's the high-end consumer, the low-end consumer, has been in an absolute panic for the last year. Scared about, so many things. The drop in their equity values, their retirement plans, their homes, job security. All of these things have caused the perfect storm to make the consumer afraid to spend. In addition, they have so much clothes in their closet and so many goods already. They say, do we really need more?
So that advance in the broader number, how do you account for that?
Well, the advance is seasonal. In other words, up 1%. What does that mean? I mean, you take off the auto sales and the gasoline prices. I guess they were up, what, 2.6% or something like that for the month. But then you take a look at the comp store numbers that have come out.
They were miserable.
Trailing off of negative numbers. I mean, as an example, I mean, the worst, and it's still one of my favorite retailers, is Abercrombie, was down 32%. But that was off of 3% a year ago. Aeropostale, which is one of the teen companies that have been a winner, they were up 12% against the 12% comp last year.
Well, then, do you expect more consolidation among retail? I mean, did they get a little lofty like so many other industries, and it's not unusual to expect more downsizing
Well, consolidation has been going on. It's going to continue. Look, we're overstored, we're overbranded, and we're overpriced. Other than those problems, there's no problems at all.
Well, who's most at risk at this point? I mean, there's a lot of names that we've seen in the headlines who are obviously facing a lot of problems, have already either filed for bankruptcy or are exploring it. Who else is out there that...
Well, there's a number, which I really can't talk about because we're trying to save some of them. But the Eddie Bauer, which is in bankruptcy, the auction for that company is tomorrow. And it'll be interesting to see what happens there. We're representing one of the parties interested in it, so it'll be an interesting time in court.
Gilbert, do CIT's troubles mean more business for private firms that finance retail sales?
Well, I think the three major players in terms of providing credit to the apparel and retail industry is probably CIT, Wells Fargo, and Bank America. And then there's a host of smaller firms. Now, Wells Fargo and Bank America are fine. My guess is that CIT is going to be bailed out in some way by the government based upon what I've been reading in the papers.
And Secretary Geithner's comments yesterday in London.
But they're very important because without the credit, the credit insurance has dried up, so that's caused a problem in the financings. But without the credit, these vendors can't place orders for goods.
All right. What about the outlook then for retail going forward?
Well, as I said before, I think we somewhat flattened out. It'll be very interesting. I think back to school is going to be down 5 to 10%. It's not a good number, but it's not double-digit declines. I am hopeful that the fall will be only single-digit comp store down. I don't think it'll be positive, but if it's double-digit comp store downs, we're going to have some real problems, and there'll be many bankruptcies and many consolidations looming.
Is that likely? 5 seconds?
Wait and see.
Okay. Gilbert, thanks so much. Appreciate you coming in.
Thank
Gilbert
you.
Harrison, chairman and founder of Financo.